today's video, we're going to talk about documents you're going to need when you apply for a mortgage. Hi, this is Paul Anderson with Primary Residential Mortgage. If you're thinking of buying a home but aren't sure where to start, watch this video to take your first steps towards lining up the financing for your dream home. Let's start with proof of income. A mortgage is secured by a lender who wants to know that you will repay that loan over a long period of time. To make sure that it makes sense to lend you such a large sum of money, lenders need to see proof of your income. This is evidence that your income is sufficient and consistent enough that you'll be able to handle the repayment of the loan. Here's what you'll need to provide to verify your income. Now, different loan programs have different requirements, so this may not be a complete list, but it is on average what your lender will ask for. Tax returns. 1 to 2 years of your most recent tax returns and W-2s or 1099s. Pay stubs. So in addition to tax returns, lenders will also want to see 30 days worth of pay stubs for W-2 employees. Your tax return shows that your income was stable during the last 2 tax seasons, but current income tells lenders that you can still pay the monthly payment as of today. A year-to-date profit and loss statement and balance sheet. If you're self-employed, lenders require a profit and loss statement and balance sheet for the most recent year and will likely require a year-to-date statement as well. This assures that your income from your business is consistent and stable enough to take on sizable debt. Letters of explanation for gaps of employment. If for some reason you've missed more than a month of work over the past 2 years, you'll need to provide a letter to the mortgage company explaining why. A month without income can affect you for many months following, and lenders fear it could cause you to default on a mortgage. Unemployment income transcripts. Now, typically unemployment income, it's a temporary situation, but if it does occur during an employment gap, a lender may ask for verification that you have received it. Proof of real estate income. Real estate income can be a little bit complicated. Any property that you don't live in is acceptable if you can provide the necessary documentation. Living in a rental property doesn't necessarily exclude you either, as long as you own a multi-unit property and you live in one of the units. This income is generally reported on your taxes, but lenders may also ask for lease agreements to support this income stream as well. Child support or alimony income. Child support or alimony income payments can count towards your ability to borrow if you've received the payments consistently for the last 6 months and will continue to receive them for the next 3 years. Why the extra requirements? Lenders know this income is temporary, but long-term payments can also help you meet your financial obligations. So be prepared to provide bank statements to provide proof that you've received the payments and a court record showing that you're entitled to these payments for at least another 3 years. Proof of any other income. If you receive income from other sources, then your lender will ask for documents to verify that income. Using additional income may help you qualify for a mortgage, so please be sure to let your lender know about all income you receive no matter what it is. Here are some of the most common types of additional income. Social Security income. Long-term disability payments not from Social Security. Retirement. Also, government annuities and pensions. VA benefits. Tips or gratuities that were included on your previous 2 years of tax returns. Each of these income types may require special documentation to evidence receiving them, so talk to your lender in advance to ensure that you're prepared. Now we're going to talk about down payment. Different loan programs have different requirements regarding down payment, gift funds, and seasoning. One of the most important details is where your down payment is coming from. This means your lender will want to know the source of your down payment. Source of your down payment funds. So if you have a down payment that's in the bank, your lender's most likely going to want to ask you for the most recent 2 months bank statements. If your down payment is coming from another source, then you will need to provide documentation of the source of your down payment funds. Many loan programs allow for gift funds, especially if they're coming from a close family member like a parent. Certain loan programs allow gift funds to cover all or part of your down payment, but they may also allow these gifts from other sources besides a close family member. So always check with your lender for any restrictions before accepting any gift. Assets. In addition to your down payment, your lender will also want to see that you have sufficient savings and liquid assets to cover your mortgage payment for a couple months in the event something goes wrong. These are generally called reserve requirements, and they vary based on the loan program that you're getting approved for. Your lender will look for cash reserve funds in your general checking and savings account, but lenders may also allow you to use certain retirement and investment accounts to satisfy reserve requirements, as long as at least some of the money being held in these accounts is sufficiently liquid, which means that it is fairly easily converted into cash. 60 days of bank statements. Bank statements are critical to determining the amount of cash you have readily available and how long you've had it. You'll need to be ready to give your lender statements for at least the most recent 2 months. This allows the lender to confirm that your current balance isn't reflecting a large cash infusion, but instead has been there consistent and that show that you have sufficient funds. Credit report, the one nobody ever wants to talk about. Your lender will pull your credit report directly to underwrite your loan, but it is a good idea for you to know what your credit report looks like before you apply so you can be prepared. You're entitled to a full credit report at no cost from each of the 3 nationwide credit reporting companies, Experian, Equifax, and TransUnion every year. If you've had a bankruptcy, foreclosure, short sale, or any special circumstances, your lender may also want to see supporting documentation. So please be prepared to provide documentation should they ask. Bankruptcy paperwork. Chapter 7 or 11 bankruptcy has a 4-year waiting period before you're eligible to apply for most home loan programs. However, in special circumstances, you may be eligible in 2 years. For Chapter 13 bankruptcy, the waiting period is typically 2 years from the discharge date or 4 years from the dismissal. If you filed bankruptcy more than twice in the past 7 years, you'll have to wait 5 years. So always save all your paperwork and provide it to your lender if they request it. Foreclosure documents. Foreclosure typically requires a 7-year waiting period before you can get a new mortgage. However, documented extenuating circumstances can shorten that to 3 years as long as you meet the other program requirements. Foreclosure alternatives like deed in lieu, charge-off, or pre-foreclosure sale typically have a 4-year waiting period, and most lenders will use the information that is included in your credit report. However, they may ask for additional paperwork, so be prepared to provide that should they ask. Divorce decree. If you're divorced, then your lender may ask for your divorce paperwork. This allows the lender to verify that assets and liabilities in both names are taken care of. Lenders may also use divorce paperwork to verify extenuating circumstances that may prevent someone from meeting obligations. So when should you start gathering up these documents? You should start getting your paperwork together as soon as you apply for a home loan. Your lender will provide you with a list of standard documents they need, and once you meet with them, they will be able to provide you with a more comprehensive list of documentation that they will need to underwrite your loan. The sooner you can start getting your paperwork together, the better. It will help streamline the process and keeps things moving forward. Regardless of whether you choose to submit your documents to a lender who will review it up front or wait until further in the process. Once you've found that house and your offer has been accepted, you're going to have to submit a whole lot of documentation to complete your application and receive a full approval from your lender. But in order to get your dream home, it's going to be worth it. Be sure to get all your questions answered, and if you need help, don't ever be afraid to ask questions. Thank you very much for watching. This is Paul Anderson with Primary Residential Mortgage.